nauseous, or is this going to be a vicious pullback to get rid of some of the market speculation?
Hold that thought. I want to get back to you about that, about the
at the cost of a true profits recession if they keep up the activity that we anticipate. And so I do think that is going to trickle through into profits and probably into employment. And generally my sentiment is very optimistic, but not at this juncture.
Yeah, I can see that. Gary, we talked about how nauseating it could get. Do you see a retest possibly here of the bottom?
I think it could, but instead of predicting, there's something very simple to watch on a daily basis, which I do like a hawk, and that's new yearly lows. If individual stocks start breaking into new yearly lows and a lot more, usually the indices will follow as they start getting the bigger guys later.
Yeah.
And I can tell you already, I think I saw just on the New York and NASDAQ, 240 stocks, Intel at a new yearly low, as well as several other importance. So I just be careful here. I think there's some more downside. I'm not sure how much. We'll take it day by day, let the cards come out of the deck. But I was pretty confident on Friday. Something was up as people were getting insane again. And typically, real bear market lows do not have froth and speculation like we've seen a month or two off of those lows. So I think just be a little bit cautious here, and we'll see what it comes of it.
Danielle, you were really crushing it with some of your earnings plays, and I saw where you tweeted about earnings and knee-jerk reactions. We are in a market, I'm going to just quote you here, we're in a market where companies can note a slew of bad news. Their stocks can fall 3% overnight and then still be bought the next day on the dip. You know, I thought about this because I was watching Deere, right? It got slammed on Friday. Pre-opening, it was not a lot, down 7% during the session, mixed earnings results. Then it came back. It was up on the day, and this morning it upgrade. Oppenheimer, Credit Suisse, Wells Fargo, Morgan Stanley, Bank of America, all up their target on this thing. So how does this happen? You know, you see a company, it's supposed to be bad news, and all of a sudden it's not.
Charles, I think it's just all about sentiment. Last quarter, what we saw were companies just getting absolutely smashed on earnings because they were reporting news that turned out to be a surprise, right? But the executives wisened up. They set the bar pretty low going into this quarter. You had all kinds of executives noting prior to their reports that their numbers were going to be less than expected. So what ended up happening was everyone knew the results weren't going to be that strong. And when you have a really strong company like John Deere that's just suffering right now in the current climate, that gave investors a great opportunity to come in and buy the stock post earnings on the dip. So right now, I'm primarily looking for post earnings plays. You know, you have some tickers that, for example, have gotten completely destroyed all year, and they have a lot of high short interest, and they're actually rallying post earnings. So I'm looking for stuff like that, and I'm also looking for strong companies that are only suffering right now during current economic circumstances, but long term, they will be great stocks to buy and hold.
Nicole, I got a minute to go. I know that you put out some extensive research here recently, and I read that you were moving toward value dividends. What does that mean?
Yeah, more than anything, Charles, you know, if history does repeat itself, we anticipate that these inflationary trends trickle through for quite some time, that the market remains choppy but flat overall. And so in its simplest form, we're just looking to get paid to wait, looking for kind of that intersection of where we can see some adaptation, perhaps growth of things like cloud, mission critical platforms around growth and technology, but then also getting a dividend to wait for that kind of that growth to come through.
A lot of people looking for dividend plays right now, a lot. Gary, Danielle, Nicole, thank you very much. Wanted to start Monday off with the right group, and we did. All right, folks, a new warning that crypto's allure, you know, that sense of community is actually its biggest danger. Well, we've got Bitcoin enthusiast Naomi Brockwell that's weighing on that at 2:45. But first, the S&P 500 obviously looking real vulnerable here, so can it hold some key support points? Plus, what does filling the gap means? You're going to learn next in Chart School.
Sometimes the music just needs to speak for itself. Hear just music versions of select Sirius XM channels, from rock to pop, country to hip hop. Our new Just Music stations have zero interruptions. Just Music channels, available now on the SXM app, included in all trials and popular plans.
Hi, I'm Jane. I wear dress size 8, but I usually order a size 6 first because I'm a little bit vain. Well, what else do you want to know about me? I spend too much time on social media. Who doesn't, right? I love shopping online and hunting for the best travel deals. Here, take a look at my entire browsing history. So,
nobody is as open on the radio. Why be so on the internet? Switch on privacy, switch off trackers and viruses. NordVPN secures your internet traffic and hides your virtual location. Its special feature, threat protection, blocks web trackers and intrusive ads. You can enjoy a more private and convenient browsing experience. Another thing, NordVPN's threat protection scans files you download from malware and automatically blocks dangerous websites. It's online privacy and security in one package. Get the special offer at nordvpn.com. NordVPN. Safely be you.
1 can of beans. That'll be $6.99.
Well, that's highway robbery.
Sorry, fella. That's inflation for you.
Well, listen here, inflation. This town ain't big enough for the both of us.
You'll never get me. Stocks, gold, I beat 'em all.
Not Masterworks. Inflation, you've met your match.
No!
Masterworks lets anyone invest in blue chip art. During the last inflationary period, contemporary art appreciated at an average annual rate of 33.3% and doubled the S&P 500 returns over the last 25 years.
So inflation, you better get your yellow belly out of here.
Interested? Head over to masterworks.com/XM. That's masterworks.com/XM. See important disclosures at masterworks.com/CD.
Individual results may vary. There's no guarantee the past performance will be indicative of future results. Invest wisely.
You work hard, and your diesel works hard too, moving you along the road long stretches at a time, covering hundreds of miles in all kinds of conditions, hauling heavy machinery, construction materials, consumer goods, or whatever the job calls for, powering the economy and keeping our country rolling, feeding that loud roar of raw, unbridled horsepower, that stirs your inner soul and beckons you to keep chasing that horizon. And hardworking diesels deserve Power Service Diesel Clean plus cetane boost. Because it cleans injectors, boosts power, lubricates pumps and injectors, and restores lost fuel economy to deliver optimal performance. So use Power Service Diesel Clean plus cetane boost every time you fill up. After all, it's the only injector cleaner endorsed by Cummins. Power Service Diesel Clean plus cetane boost. For diesels that work as hard as you do. Visit powerservice.com.
You're listening to SiriusXM Radio.
Folks, welcome to Chart School. You know, one thing we talked about a lot was the fact that the S&P went back here and retraced its 50-day, the 50% of the pullback that it had. That was supposed to be a great sign, but as you can see, there are other things working. In fact, the trend line is to the downside. So I want to bring in Asbury Research Chief Market Strategist John Kozar. And John, what else is at play here? You know, I mean, we kind of felt like, okay, if you go, you get a 50% retracement, you hold, and you start to rebound a little bit. At the very least, you don't go back to the lows, but there's no doubt that the bias is still to the downside.
Yeah, I think what you saw here over the past week is not only the S&P, but most of the major indexes are all up against their 200-day moving averages. In the S&P, it's about 4,300. And what happens for investors and traders is once you're up against those levels, the risk reward gets upside down. You know, do you want to hold that, or do you want to wait for the market to get to the other side of those levels before you put some new money to work? Right. So I think a lot of that, you know, you mentioned that the 50-day retracement of the whole move, you have the 200-day moving average there, you've got the January trend line down, you've got the low from October of last year. It was like all these things were coming in right around 4,300. So I'm not surprised at all to see that we've had a sharp move down. You've got some seasonality coming into play here into September. I want to see how deep this goes, and I want to watch the VIX and see how frightened this makes the market. If the VIX can stay under control here, we could find some footing here in the next week or so.
You know, of course, the VIX has held up a lot better throughout all of this than anybody anticipated. I want to talk about downside risk because you just alluded to it, and we've got the S&P 500 has made this wonderful move, and talking about filling a gap, right? So when a company or a stock opens a little bit higher, it has this gap. Normally they'd get filled, which would mean we would come down maybe 41.50 or something like that. If we fill this gap and we don't hold there, how vulnerable would the S&P be?
You know, I look at the gaps because they're natural support levels. I think you look at what other people look at so that you can find levels that might be sticky in the market. But I'm much more interested in watching the asset flows in a lot of key ETFs like Spiders and also QQQ. Those asset flows really expanded over the past couple of weeks. There was money really coming on those things hard. I want to see what happens today. The assets backed off, obviously, over the weekend. There were people taking profits, didn't want the overnight risk, didn't want the weekend risk. But I'm paying more attention. There's a level that I'm looking at here that's about 41.75.
Okay.
It's the high from June the 2nd. I think that's a big deal.
John, real quick, let's go back to the 200-day moving average. I got a chart here to help the audience. Perfect example of this, right? We shot all the way up, hit the 200-day moving average. This is the total market, the iShares total market, and we're pulling back here again. The 50-day is way down here. I mean, again, you don't sound like you're bearish, but what would it take to make sure we don't go down and test that 50-day moving average?
If I had to pick one indicator, the VIX. If the VIX gets above 24, if the VIX gets above 24 and stays there, we're going lower. And we're going to keep going lower on a tactical basis until the VIX cools off a little bit. The VIX is right at 24 right now. So I think if I had one indicator to watch all week and that was all I could look at, I'd be looking at the VIX.
All right, sounds great. VIX is one of my favorite indicators as well. Although 24, wow, we're right there. I didn't think you were going to be at that number. We'll keep an eye on it, John. Thank you very much, my friend. All right, folks, coming up, housing affordability is tanking. Millions of Americans struggle to pay basic bills. And guess guess what? A record amount of people are working 2 full-time jobs. Certainly doesn't sound like an economy that's exploding, more like imploding. And Bank of America says we have yet to see the ultimate lows for this market. We've got more market guests later on to figure out just what the lows might be. First, though, Brian Westbury. We'll be right back.
And paid for by Sentinel Group. Attention parents of premature babies. If your child was born prematurely and was later diagnosed with severe intestinal injuries or necrotizing enterocolitis, also known as NEC, you may be entitled to significant compensation. Several studies have shown a link between cow's milk-based formula and serious intestinal injuries. If your baby was fed a cow's milk-based formula such as Similac, Enfamil, Gerber, or even store-branded cow's milk-based formula and suffered from severe intestinal injuries, call us today. NEC is a severe intestinal illness that often requires surgery and can be fatal 50% of the time. If your child was fed a cow's milk-based formula and later suffered serious intestinal injuries or NEC, you may be entitled to significant compensation. Our attorneys will fight to get you the compensation you deserve, and you pay nothing unless there is a recovery in your favor. Time is limited to file a claim, so call us at 800-785-7064. That's 800-785-7064. Again, 800-785-7064.
Love Genucell plant stem cell therapy. Have used it all over my face, under my eyes. It cleared up the dry flakiness and even reduced my forehead lines. Someone even asked if I had surgery or procedures done. Nope, just Genucell. That's Samantha from Arcadia, California, raving about her transformative results. Here's my wife Charlotte to tell you more.
Genucell has sold over 1 million products to women and men across the country. Fine lines, forehead wrinkles, dark spots, sagging jawline, and even those annoying bags and puffiness gone without risky procedures. And with its immediate effects, guaranteed results in as little as 12 hours or your money back. I love Genucell.
Now see the difference for yourself with 65% off their most popular packages at Genucell.com, including the classic under-eye bags and puffiness treatment. Visit Genucell.com and enter SXM at checkout for an extra 20% off. Order today and get the Summer Essential Dark Spot Corrector absolutely free. Go to GENUCEL.com/SXM. That's Genucell.com/SXM.
The transportation industry is as busy as it has ever been, and Oakley Trucking is seeing the demand for more qualified owner-operators to grow our fleet. Hi, this is Jeremy Kellett with Oakley Trucking, America's dry bulk hauler. And I would like to invite you to check us out here at Oakley Trucking. We have some great informative videos on our YouTube channel, a weekly podcast, as well as a fleet of owner-operators that are willing to answer any questions that you may have. Check us out today or give us a call, 877-651-1388.
Summer's going strong, and when the heat is on, you need great shirts that look and feel cool. Untucked has you covered with shirts designed to be worn untucked, so they look sharp, feel great, and help you beat the heat. Shop wrinkle-free styles that fight creases all day, cool polos that look great at a beach or barbecue, and shorts that stretch. Keep your cool this summer with Untucked, shirts designed to be worn untucked. Use code SUNSHINE for 20% off your first purchase at Untuckit.com or more than 80 Untuckit stores.
1877 Cars for Kids. KARS Cars for Kids.
Donate your car today at carsforkids.org. That's cars with a K. Your car, running or not, can be picked up as soon as the next day. You'll get a maximum tax deduction and a vacation voucher.
1877 Cars for Kids. Donate your car today. Vacation voucher not available in Oregon.
How you'd like to have limitless access to trailers around the country with flexible rental terms. Through Repower, you can. Repower is a marketplace where trailer assets are seamlessly shared across a connected software platform. Repower has made renting trailers quick and easy. Create a free account on repower.com and earn 10% off your first reservation using code UTN. Join the world's first universal trailer network on repower.com. That's REPOWR.com.
All right, so all eyes on the Federal Reserve as inflation remains at the highest level in decades. While there are clear signs this economy is just simply imploding. Now, there's no doubt the Fed's going to hike at next month's meeting. The street right now torn on just how much. Moreover, there are questions about what happens after that, after September. Joining me now to discuss First Trust Advisors Chief Economist Brian Westbury. All right, Brian, lots of scuttlebutt. Powell's going to try and clean up his comments about, being there neutral. Maybe also, something about slowing down the pace of rate hikes while acknowledging that they haven't abandoned them altogether. They're still hawkish. How do you see it playing out?
Right. Yeah, Charles, this is... I wish we had a half an hour to discuss this, because the Federal Reserve in 2007 and 8, really starting in 2008 with quantitative easing, completely changed the way they manage monetary policy. It used to be that the federal funds rate and the money supply, the monetary base, were connected. Now they aren't. And so the Federal Reserve is raising interest rates, but we still have 40% more money in the economy. And so we're going to have inflation, and then the harm from these interest rate hikes, because we've held them so low for so long, it's all going to happen together. And that's the recipe for stagflation. And they haven't explained it at all. I certainly hope that at Jackson Hole, monetary policy makers talk about money supply, because they haven't talked about it in years.
Right. Well, hasn't it come down about $1 trillion? How much more do you want to see? How much more money do you need to see come out the system?
Yeah, Charles, this is the interesting thing. The Federal Reserve's balance sheet is different than the M2 measure of money.
Right.
So between 2014 and 2019, roughly, the Federal Reserve did quantitative tightening. They shrunk their balance sheet by about $500 billion. But the banks grew during that period. And so these two things are separated. And I know this is kind of complicated, but think about it. Once the Federal Reserve creates money, they create M2, which is all deposits in all banks. It's checking accounts, savings accounts, money market accounts. You and I and your viewers own those deposits. How do they take them away? They're private property. Mm-hmm. So my belief is that once the Federal Reserve creates money, they can't make it disappear. So they can shrink their balance sheet, but that doesn't shrink the money supply. So the rate hikes that we're seeing, well, look, we know housing has just stopped. Like people had like a coronary with 3% to 6% mortgages, and they just stopped looking. Right. That's going to hurt the economy, but all this money is still out there, and that's going to create inflation. And I know people don't understand this.
But hence inflation.
The Fed hasn't explained
it. The inflation part goes up, but the economy stagnates or even goes lower. I got 30 seconds, but I do want to get your thoughts on this, because you talk about what people don't understand. I got to tell you something right now. A lot of people don't get it, that the Fed is deliberately reversing the wealth effect, as living costs are already through the roof. Right. If you look at utilities, gasoline, goods at home, food at home, along with electricity, it has never been higher. It has never in history been this high. So what do you tell people that, hey, the Fed's going to even make your life worse than it already is?
Yeah, that's exactly right, Charles. And at the same time, what they're focused on is climate change and equality and equity. They're focused on things that banks and money have nothing to do with. And so they're making everybody's life miserable and convincing themselves that they're doing the right thing. Yeah. That's the worst part of this.
Brian, I wish we had 30 minutes too. Maybe we could do a special on this. Yeah. Our town hall on inflation went through the roof. Everybody was curious about it. Thank you so much. You're one of the best. I appreciate you. All right, folks, of course, we're all worried about the large debts that this administration's been lavishing out, particularly on college-educated Americans. They got they got child tax credits last year. They get EV credits. They get solar panel checks. And, of course, soon they may get debt forgiveness. Now, keep in mind, again, these are the richest Americans. And when you look at excess savings, folks, you hear this from economists all the time. Well, they are holding on to about 80 to 100% of their pandemic savings. However, the 20 to 40%, that's the second lowest bracket. That's all they've got. And if you're among the poorest Americans, you'd be lucky to have 20%. Most have less. I think this is a new kind of elitism. Joining me now to discuss is CN Plus CEO Lily Gale Valletta. Lily, I gotta say, they're lavishing so much money on the most successful people in this country, people who are on track to have the best lives. What do you make of it? How are they getting away with this politically and economically?
I think that's what happens when you've never created a job or run a business. Because when you keep, let's say, penalizing those that are creating jobs and therefore making it more expensive to run your business or open new job positions, and at the same time those that want to get those jobs cannot afford everyday living because of the inflation rates and the hikes that are going all around, it's a never-ending compounding issue. We have estimates that anywhere around $20 billion is going to be that tax consequence for the middle class with this new Inflation Reduction Act. And I don't see any real plan that tackles that lower part of the pyramid, so to speak, that continues to work two jobs and not make ends meet.
Let's talk about that for a moment. It's really scary. Right now at this time, how many people are working two full-time jobs? I'm not talking about a side hustle. I'm talking two full-time jobs. Right. How many Americans are telling surveyors that they're at least one parent skipping a meal? I mean, the economic turmoil does not match what I hear in the media, and certainly what I hear from this administration.
Yeah, in the era of equity and inclusion, where is the formula for economic inclusion, right? A lot of stuff is quite basic. If we keep, hiking rising the interest rates, and it becomes more expensive to do business, all of a sudden the bodega across the street here that is serving a lot of our lower income communities are going to have to charge higher prices, and it just becomes this impossible situation for the single mom, for the parents, that yes, some of them have chosen to not work because they can't afford to pay for daycare, and those that are working, maybe the one is out working the two jobs so that you can afford one meal. But maybe they should get one of those tax credits for a solar panel, and things will be better.
Well, I know the projects, I don't know if you can everyone in the projects can split the cost of those solar panels. It's so interesting you talked about the cost for child care, because if you look how much money it costs to go back to work since the $1.9 trillion went through, child care is up there, about over 3%.